Yo, what is going on, guys? I'm back with this new series. I wouldn't say new series, but I'm back with the road to profitability. I know I took some time off of that. A lot of shit was going down in Australia that I just couldn't stay on. Well, I wouldn't say I couldn't. I just didn't stay on top. I got thrown off, distracted. I was just not. I guess I just didn't want it that bad. So I'm now in a state of mind where I really want it, and I have taken time off just this last week off of Instagram. I took the last little bit off. I haven't posted in a little bit. You guys have probably realized that. The reason why is I deleted all social media so I could focus on myself, focus on my mindset, focus on getting everything in line. So update on the monk mode, as well as I've been doing everything that I stated I was going to do in monk mode. The diet part I changed up a little bit. I am still eating the same. I just added veggies into it and certain types of things, just to kind of keep myself in line. Still a very healthy diet. I'm still doing all the meditation, which has been amazing. I'm still reading every day. I'm now onto this book here, Think and Grow Rich. So we're reading this guy again. I've read it already before in the past, but I'm reading it once again. But I do have a lot of new things I'm doing. Like I showed you guys in the monk mode video, I have that streaks thing. I'm doing that, but I have it for a morning routine and a night routine now, where I'm doing in the morning, 10 minutes meditation. I have to read for whatever X amount of time, 30 to an hour, which I usually give myself about an hour now. I have to do cold showers. I have to do all this type of stuff. So anyways, yeah, basically I'm still doing all that. I just decided to take a step away from social media so I could really just come together and just get to myself. But now that I've done a lot of thinking, a lot of observing, a lot of self-reflecting, I'm ready to come back, and I just want to just slam out as much as I can. So guys, this will be the road to profitability day number 12. I believe it will be day number 12. So we're just going to jump right into this one. I'll be doing this just, help myself, help anybody else. And today is going to be going over trading plans. So let's dive into this right now. So I just wrote up my trading plan once again. This is kind of just like a scratch of a trading plan, but this is what I've written up so far. I know it's not a lot. We'll be adding onto it as time goes on, but so far this is what I got. And if you guys don't have a trading plan or don't have any sort of trading thing that you're following, you guys really should, because it's such a huge help, and it allows you to just kind of stay disciplined and on track of yourself. So anyways, going over it, basically you should start off with your trading goals. So I wrote down for my goals just to build the best possible habits and be able to understand as much knowledge and experience in these markets as possible. So I just want to have really good habits. That's all I want to do, is just build good habits, and I believe that the money will flow with those habits being created, right? Next thing, I want to be, this is for a longer term, but I want to be 7 figures funded, and eventually I want to be able to support myself and help my family out financially and give them the most experiences in life that they can. Those are just 3 goals. I do have a full list of other goals in another section on my Notion here, but yeah, I just wrote down these as just some of the trading goals, and I have other ones like I said, but these are just some of them. What style am I trading? I'm trading ICT, SMC concepts. What will I be trading? So these are the pairs that I'm strictly trading, which will be NAS 100, NASDAQ, and the S&P 500. So now I go into when will I trade. So I'm only going to be trading New York AM session, which is 6:30 a.m. to 8 a.m. PST, which is in Canada. So it's and I wrote down the macros here for that time, where basically you want to kind of look for your trade during these macros. These are the best times. So this is the only time I'll be trading. I won't be trading any others. I won't be trading PM session until maybe I get a better grasp on it. I never really trade PM sessions, so there's no point in me trading it. Now I'll jump into the confluences that I look for. So basically I'm looking for a liquidity sweeps. I'm looking for break of structures. I'm looking for change of state and delivery, which is pretty much the same thing as a break of structure. I'm looking for order blocks. I'm looking for fair value gaps, equilibrium, golden pocket. Now that is a new term that I just learned, which is basically Fibonacci, almost like optimal trade entry. You guys know what that is, but you'll see me using that, and I can go over that in another video. And then also SMT as well. So these are all the things I like to look for and I like to see. I don't like to overcomplicate it too much, but I use all this from my higher time frame analysis down to my lower time frame analysis. Now going over what do I need to see to take a trade. So I need to understand the higher time frame bias, because without the higher time frame bias, you're not really going to get anywhere. You're kind of just taking a guess on it. So I like to know the higher time frame bias. higher time frame draw on liquidity. So where is the 1 hour or the 15-minute going to draw towards? And then I like to look for a liquidity sweep or an SMT on the lower time frame, or an imbalance fill on the, or sorry, I like to see a liquidity sweep, SMT, or an imbalance fill on the higher time frame. So what I mean by a higher time frame is more like the 1 hour, the 15. Mainly this goes towards the 1 hour, I'd say. This one goes towards the 1 hour and like 4 hour. And then basically I like to look for a lower time frame sweep or SMT if it's in an imbalance. So if it's not in an imbalance, then you can kind of go off of, you know, the higher time frame liquidity sweep. Yes, getting another one like a turtle soup is really useful and helpful, but you don't necessarily need it all the time. So I like to look for a lower time frame liquidity sweep or SMT, which is inside an imbalance. So that's just to give it higher confluence. Then I like to look for 5-minute change of state and delivery. And then I'll enter off of a 5-minute fair value gap or order block entry. So those are the two entries I like to see. I need to see at least 3 of these. I need to see at least 3 of these confluences in order for me to enter a trade whatsoever. And I'm only entering on the 5-minute order block or a 5-minute break of structure or 5-minute FEG. So, forgot to add that in there. So I'm only entering off a 5-minute order block, a 5-minute FEG, or 5-minute break of structure if the risk is acceptable. Now, the reason why I'm stating 5-minute break of structure, and that's if everything is lining up exactly how I want it to. Sometimes the 5-minute won't come back to the order block or the fair value gap, which will result in you missing out on the trade. Now, if it was a losing trade, it would come back to that order block regardless. So if the risk to reward, like if the stop loss placement is in good enough range of just the break of structure, then by all means, if you have high enough confluence, feel free, enter the trade. But that's only if I see 3. So if I only get the break of structure with a liquidity sweep, that's 2, and that's not good enough. That's a very low probability trade. If I get the break of structure with, you know, a liquidity sweep and then maybe a lower time frame SMT, chances are it's a higher probability trade and it's potentially going to work in your favor. So going now into risk management area. So I'll be targeting a 1 to 2 stop and break even when I hit 1 to 1 or a liquidity point hit. So going into that a little bit more, I'll target 1 to 2 or the next draw on liquidity. Now, if the next draw on liquidity is longer, so if it's like a 1 to 3, and my 1 to 2 is obviously lower than the next draw on liquidity, I'll still target the 1 to 2. Depending on how the market's moving, I'll leave a runner. I'll take partials and leave a runner to that 1 to 3 point, or I'll just call it at the 1 to 2. From back testing, I have enough data to prove that 1 to 2 is good enough for my win rate. And yeah, so basically 1 to 2 RR, stop at break even, or if we hit a liquidity point that is just before, so let's say there's a high and there's a high here and my 1 to 1 is just a little bit above the high, hits that liquidity point, I'm more than okay to take the trade to break even there just in case it does decide to want to reverse off of that. So I'm only allowed to risk 1% per trade, and that's just because I'm really trading funded capital, and that's just because I'm starting at the low point right now. When I do get more funded accounts, I am open to risking more to earn more, but that's not till later down the road, so I will change that up when the time comes. If I enter drawdown, I will de-risk until losses are made back. So right now, anywhere in break even and profit, I'm okay with risking 1%. If I go below the break-even point, I'm in any sort of drawdown, I now de-risk down to 0.5% per trade, or even 0.25, so a 1/4% per trade. If I'm in that much drawdown. So I'm just doing what I can to keep my account in as safe as possible. And so basically with that, I will be able to take more trades and get out of maybe that little losing streak that I'm in to get back into the winning trades and then get my account back up to where it needs to be. So like I wrote down here, exit at draw on liquidity or 1 to 2 if the 1 to 2 mark is before the draw on liquidity. And make sure the draw on liquidity is about a 1 to 2 RR. So if it's like a 1 to 1.5, chances are I won't take it, but depending on the situation, I will take it, and then maybe take partials. But usually, I will not take it unless the draw on liquidity is 1 to 2. So if it's 1 to 3, it's perfect. 1 to 4, even better. You just want to make sure that your draw on liquidity is at least 1 to 2 RR. And I guess I missed this one too. If I take 3 losses in a row in 1 week, so if I hit Monday, Tuesday, Wednesday, and they're all losing trades, I'll take the rest of the week off. I'll demo trade the markets, but what I'll do is I'm going to go over all the losses that I'm taking, review them, so I can go into next week with a better mindset. Because if you just take 3 losses in a row, then chances are you're going to be going into your next trading session with bad mindset, hopping into trades that you shouldn't be hopping into, and etc. So basically, this is kind of what I've gone over with my trading plan. This is just a smaller trading plan. Like, I will be adding more into this, probably some affirmations, so I can read over this every day and just go and make sure that this is implemented into my mind, so that every trading session I know exactly what I'm looking for. I know what I'm going into. I know what works over time. And if I enter a losing streak, I understand that the plan does work over. I just need to get out of that losing streak. One thing that's also a huge help that I did not mention is that if you actually write up a checklist, so on Notion here, which is lovely, you can go to your to-do list. And so I could just be like, these are all the things that I need to see. So I need to see the liquidity sweep. I need to see break of structure, change state and delivery, fair value gap, order block, SMT, IFVG. Oh, I didn't even actually write that in there. My bad. So I'm also going to add that confluence inverse fair value gap. So I also need to see an inverse fair value gap, which is a very good confluence to reversal trades. EQ, golden pocket. So what you can do with this now is every trading session, you can go into the markets and say, okay, do we have a liquidity sweep? Well, let's see for this trade today, for instance. If you guys watch my Instagram, you'll see that I actually got taken out at break even on this trade. But as you can see right here, do we have a liquidity sweep right here? We had a liquidity sweep. We're in a higher time frame fair value gap. We have, if I come down to the 5-minute here, I dive a little bit deeper in here where our entry is. We have that 5-minute change of state and delivery right here. Enter on the order block. And then price goes down to take out your take profits. So that, what I could have done is been like, okay, yes, we had a liquidity sweep, we had a break of structure, we had a change of state delivery, we had an order block, we had a higher time frame fair value gap, we had a smaller time frame, we had a 1-minute time frame SMT. I didn't really see any inverse fair value gaps, and then equilibrium I wasn't really paying attention to today. But as you can see, we checked off a lot of the confluences, which allowed me to enter the trade, which worked out. So that's one thing that's helped me a lot coming into my trading sessions, is having that checklist. And once I see enough checked off, then I'm like, okay, I'm okay to put risk on the table. So if you guys have not tried that, give it a try, see if it works. But anyways, that is the road to profitability day number 12, and there's going to be more videos coming out every single day. Well, if not every day, we'll do 3 videos a week. There will be a lot more videos coming out, a minimum of 3 a week. So if you guys want to continue with the journey and keep following, hit the subscribe button, hit the thumbs up button. Let me know in the comments what I should do for some of these videos, and I will deliver. But anyways, yeah, I'll see you guys in the next one.